Hey guys, welcome to today's Traders Show podcast, episode 26, I believe, and we're moving. It's a good thing, and today, a very beautiful, very interesting topic we're going to talk about, we'll talk about the current market condition, what we're seeing around the globe, what's happening with interest rates coming back in, tapering starting, lessening the bond buying, and many other things. Cryptocurrencies at sort of all-time highs. Most stocks and indices also pushing to all-time highs. Yesterday we saw market pushing higher, and the dollar sort of fighting back, getting some strength, getting weakness. So what do we think is going to happen in the markets as we move forward in terms of how we normally trade, positions we're looking to look for long term? We're just going to analyze a few things and talk about what we see happening in the markets. It will be a bit different because we normally talk about different topics what we've learned so far, but today we're going to talk deeply about markets. So I believe you're going to learn a lot and just hear perspectives. We're going to be like CNBC's Squawk Box. So if you've heard about it, that's today. Tom Keane, I'm here, Jonathan Ferro and Tom Keane. Anyway, on a light note, so how have you been, Taras? How's your week?
For me, I've been good. My week has been, in terms of trading, my week has been a bit tough. Some good trades coming my way, but still not getting really into my target. So I had to cut them short before materializing. Today I missed some trades because of sleeping, and just you just move on, right? Yeah, so that has been my trading week. Yesterday also we had a very interesting, very important news coming out from the Federal Reserve also. So that was, I think,
most of the week.
Yeah.
More or less.
That has been one of the most important news coming out yesterday. And that fueled us to at least come and explain to you what we think about the current global financial markets, where they are, cryptocurrency, bonds, currencies, stocks. And I think we are at one of the most unprecedented times in history since the COVID low. So it's been a very, I don't want to call it weird because it's my first time in these markets watching such big moves happening, and stocks and stuff.
Continue.
Yeah, so looking at how markets have changed just in 1 year, it's something that has not happened in I think the whole of history of financial markets, like markets gaining more than 100% in a year. So we're gonna talk into that, dig deep into why markets are there and what we think where we think markets will move moving forward. Of course, it's our own biases. No one is right in the markets. No one knows where the markets will go. But we have some biases and we have some ideas of where we think markets will go, depending on how technically, and also depending on how the Fed reacts to the current inflation status in the global markets. So that will be it. It will be more of fundamental, not more of technical. So we'll be tackling most of the fundamental things. So if you're not familiar with fundamental trading, at Financial Hub we do teach fundamental analysis also. So it's good to equip yourself with both sides of trading, the technical side and the fundamental side, so that when an event like yesterday, interest rate coming out, you're not in the blues. So you need to understand what is this guy saying by tapering and not increasing rates and all that. So I think it will be a very, very important topic for us to share with you guys, and I hope you enjoy the 1 hour or so. Ken?
So hi guys, hope you're having a wonderful time wherever you're watching us from. So like my colleagues have echoed, we are going to just basically tackle financial markets. So when you look at markets, I think you can look at markets from different perspectives. So you can think about market from a fundamental perspective, from a technical perspective, and from a psychological perspective. So those are the three main wings that you can look at. Recently, there's been the introduction of the quantitative side of looking at things, which is more about computers, machine learning, artificial intelligence, mathematics, algorithms, all these coming together to try and predict where markets are going, try and form strategies of different market conditions and how to make money under different environments. So today we are moving much from the other side of the market, and we're going to focus more on the fundamental side of the markets. So when you look at markets, where are valuations, where are interest rates, where is the debt cycle, where is the economic cycle, what's happening with the Feds, So those are some of the things we'll be talking about, what we think about what is currently happening, how it's likely to affect asset prices, how it's likely to affect the economy, the risks contained in the current economic environment. And primarily or unfortunately, we are going to focus on only the global economies. So if you look at the global financial markets, like Lavi said, I think for us, we don't mainly focus on what is happening in the Kenyan market. If we were experts at that, we'd tell you how the Kenyan economy is doing, what the GDP is doing, like what we think it will happen, or what we think will happen, how the elections are coming to influence the market. I do think about these things personally, but I don't have a clear grasp on what is really happening in the local economy. So I won't try and tell you that I think this and this will happen or this and this will happen. Instead, I'm more focused on what's happening in the US, China, and Europe. Those I think are the main markets that I look at. So I mainly trade the global markets. I look at the US markets. We look at what is happening in Asia, and the currencies. I look at what is happening in Europe and how commodities are being affected by that. So those are also very important things which we'll talk about. Trading wise, basically I have at least gotten a very good trading week for myself. So this was a very volatile week. Volatility comes with opportunity, but also a lot of risk. So beginning of the week, I decided not to take any trade, just to observe and see how markets will zig up and down. But within the week, I found some beautiful setups which I decided to take. One worked, one failed, and currently I'm in one after volatility has died off, and it looks like it's working pretty well. So I don't have any challenge currently with the markets. I think the markets are really working well, and that's it happens. Like, there are good days and there are bad days. So that's from my trading side. But I think what's more important for us now in this podcast is to kick off the topic and to just dive deep into what we think will happen from different perspectives. Yep.
Cool. So yesterday, boys, we had interest rates. So for the past 2 weeks, and I think I talked about it last. I don't know. It was on yesterday's Zoom session on our analysis. So for the past few weeks, we've been having interest rates from, I think, across the globe. We had Bank of Canada starting off last week. Then we had the European ECB.
Australia.
ECB. Then we had Australia on Tuesday this week. Then we had Feds yesterday night, and today we have Bank of England. Yeah. So it's really important this time because we are starting off what I believe first. If you're in the forex market and if you're starting to trade, or well, I don't care if you've started out, if you're not, this is a really good time, a really good opportunity to learn a lot about economies, fundamentals, shifts when they're changing, the tapering, the bond stuff. So I think it's a really good time looking at the stocks going to all-time highs. So it's a really good time to learn a lot from the markets as much as you can. So with the interest rates being said, as I was talking about, we've been doing, I remember on Monday when we were in the office with Ken and one of our interns called Eugene, Ken sat down, and Ken took the board, and on the board we started talking about what do we expect if the Feds increase or decrease. So we came up with different perspectives, and I think, Ken, they came out it was a good preparation.
Yeah.
At least we all had we had a discussion, and which personally I believe if we didn't have that discussion, I wouldn't have a really good perspective, maybe a little bit, but not as clear as what we had, because Ken was able to break down for us how interest rates will affect the bond buying, and how that will also affect the inflation, so cause and effect, and how now that will come and affect the currencies,
asset classes.
and all the asset classes, commodities, and all that. Because ever since we've seen inflation being really high, what Ken was teaching us, we've seen things like oil. It's a good indicator of inflation. Oil has been rising from 0 to $85 a barrel, which we've seen a bit of correction, but that's what has been happening around the globe. We've been seeing also things like Bitcoin have been acting as a hedge against inflation at all-time highs, and Ethereum. We've been seeing dollar really falling, but of late we've been having a good push further up. I think people are already pricing in what they're expecting to happen in the markets earlier on. As we were discussing, the markets is always ahead of reality. And that's just a brief overview. So yesterday we had interest rates. What are you going to say?
And I think it's important for us to at least highlight a summary of how did the markets get to where it is right now? How did we get to this current market environment? Can you take us through that?
So take back history. So
just a quick one.
For the past
COVID,
2 years,
maybe, just the past 2 years, maybe.
Yeah. So I think we can go back all the way from 2016. I think we can just look at markets from 2016 all the way to what has happened in 2021. So in 2016, when Trump was elected, people expected markets to sell off, but markets never sold off.
What markets are you talking about?
when we talk about markets, we'll primarily focus on stocks, indices. So we're going to look at equities, because the equities, the S&P 500, the Dow, that's the benchmark of the market. So if we talk about the market, those are the main markets that we talk about. But if we talk about a specific asset class, then we will talk about the specific asset class. I think that's also important for someone to understand. But if you look at the Dow and S&P and the Nasdaq, immediately Trump was elected, markets just went down a bit, bottomed, and started moving higher ever since he was elected. And then in 2018, 2019, we just saw some sideways movement all the way into 2020 when we had started again breaking out to the upside. Then COVID happened. And part of the reason for the move upward was Trump is a Republican. Republicans normally have very, very good policies for business. So when a Republican comes in for power, we expect taxes to go down, we expect favorable business conditions, and markets have to price all that in and just go up, because that's what is likely to happen. So we had tax breaks coming in from Trump, the Trump administration, where like corporations were paying very little tax and the rest of the money was used to invest. And these were favorable business conditions. So we saw the markets move higher. But when 2019 came, 2020, markets moved sideways, for quite some time. And we had started breaking out just before COVID happened. So I think COVID was the big thing that changed everything in the market. So I think COVID changed.
In between there, we had the transition of Republicans to Democrat.
It was after COVID, I think. Or it was before.
It was in January.
It was after. Trump was running.
Trump was
the president.
Biden entered this year.
Yeah.
Oh, sorry.
Yeah. Okay. So Trump was still in power, because if a COVID never actually happened, there's a very high chance Trump will still be running America.
Oh, I remember the way he treated it.
Exactly, because he lost a lot of popularity during that time.
I'd forgotten.
So COVID came, and when COVID came, asset prices had to go back down because of lockdowns. We didn't have anyone going out. Supply was affected. Demand was affected. There was no one coming to the market. So we had markets like oil having a lot of supply and no one using oil. Factories were closed. All efforts were turned into trying to curb the virus from spreading. People came back working from home. So a lot of things changed due to COVID. So COVID was the main driver of the market during that time. So if you observed markets like during that time, if you were trading markets, you had the big move down. And then when the big move down was starting and was developing downwards, the Feds came in and tried to support the economy. So the Feds came in and started printing money, and bailouts were there. So we had some companies like airlines being bailed out. So you'd hear an airline being offered like 10 billion to ensure that they survived the economic crisis. We went into a recession. So for the first time, we saw a very, very big deep recession. Exactly. I think in the US, we had an employment sitting at 10 or 20%. The highest seen ever since the Great Depression, right? So we had very, very, very severe consequences from the COVID pandemic, because if you look at the hotel industry, it was basically dead. So a lot of people lost jobs and such things happened. Exactly. So the Feds came in and they tried to support the economy. And the first thing was the bailouts. The second thing was sending checks to the American people who had lost their jobs. So people were sent the 1,200 checks to ensure that they survived during this time, because they didn't have any money. So the government, unlike other governments, like the developed world, they'll take care of their people. So they were sent $1,200, and at least people had something to live off by and to get by during the tough times. And the effect of this in markets is when we have lower interest rates, when you have a lot of money, this money has to be invested, because when rates are low, investors tend to look for a place whereby they can get higher yield. And we saw markets like gold moving very high. So we saw gold come back from about 1,600 to top at 2,000 and something. A market as oil started coming back from about $10 a barrel. We saw the market start coming back to about 35, 45. We just started seeing some moves back. The Dow bottomed at 18,000, started coming back. Nasdaq the same. The dollar started collapsing, and the dollar was the main thing that was driving some of these things. So the dollar lost a lot of value, losing all the way from about 100, going back down to about 95 or something.
Even lower, 92.
Or even lower, exactly. Because so so these were some of the things that were driven by the Feds. And when you have a lot of money in the economy, people tend to buy stocks. So the stock market becomes very, very hot. We started seeing very big jumps in the markets. Like you'd see a 2% jump, a 3% jump, 8 days of straight gains. Like we've seen an environment which we have not seen before, like Lau is saying, because you've been trading for quite some time. And markets don't really trend that much in one direction, trend that strongly, have that momentum in a particular side.
Quickest recovery.
So it was a V-shaped recovery. So these are some of the things which have now resulted into us being where we are. But currently where we are, there's some risks. And some of the risks include, one, inflation. So I think now we can take it from there.
Yeah, and also in terms of the money, apart from stocks, we also saw a lot of chunk of these people getting money without proper advice. Cryptocurrency.
Exactly. The crypto markets also. Bitcoin coming from 5,000 to about 60,000. Dogecoin, Shiba Inu. Elon Musk being known as the market maker. Like there's a lot that has happened over the last 2 or 3 years. And I don't think some of these things will last forever. I think this is just a party.
So all that pumping money, then we also have to mention that now during that time, most banks around the world had to reduce the interest rates. Which really went low, and the effect of that was slowly, it came slow, but it came. Rise in inflation, what you're talking about.
Exactly. I don't think it came slow. It came really
fast. But that's a
it came really fast.
It came fast. They never expected it to jump that fast.
Central banks don't cut rates drastically.
True.
They cut rates.
This one they cut
by 0.25.
Slowly by slowly.
Yeah. I think it was at 2 point something. Directly to 0
directly
point.
Zero.
Yeah, they cut. I remember they had like
on one talk.
It went. They had meetings, and each meetings they were following emergency meetings. And they kept lowering.
So that effect, of course, low interest rates, high borrowing, more money in the economy, chasing too few goods.
But exactly,
inflation,
cause and effect.
Cause and effect. So, and that is now what has been driving markets until this point. Every time we listen to the Feds, the ECB, we are trying to see their tone on inflation. And if they raise rates depending on where they believe inflation is, according to their own targets, because they also have targets. And if you listen to yesterday, Powell was worried that inflation is already ticking up above the 2% target. But he believes it's not. He said it's not like the original Phillips curve, whereby inflation and unemployment are directly related. So in this, he thinks what Ken you're saying, demand pull. It's a demand pull inflation.
Exactly.
So not like because also there's that supply drag in terms of the supply chain problem in the world. So there's that also leading to the inflation we're seeing right now. So according to the central banks of the states, they believe the current inflation is not really just because of the low interest rates. And I think for me personally, I think that's a misguide.
Exactly. I also believe like I agree with you there.
Because that has been the main driver of inflation. Okay, in as much as there's this other Delta variant coming out and all that, still it's a fact that there's too much money in circulation.
Too much.
And we were talking about how much dollars has been printed just in the last 1 year.
Over 20%, right?
Over I think 30% of the dollars has been printed in just 1 year.
In 1 year.
So of course
in the whole of what, over 100 years plus.
Imagine, So you like the amount of money being pumped into the US economy has been too much. And you can see that translating into the prices of other assets and the diminishing dollar from last year. So okay, for me, I don't know fundamentally what, like because one, I didn't expect personally when I was trading last year, because I was actually trading when Dow crashed to 18, the comeback to 26, 30, all the way to where it is right now. And I remember also, Ken, you also didn't expect markets to break the COVID high and even go higher more than 50%.
Exactly.
Like in terms of okay, I don't know if it's because of the lack of deep understanding of our fundamentals.
I believe it was because I remember when now we came to start discussing about it, and I remember Ken was, sometimes you're normally looking at what mistakes have we done, how can we learn from it. I remember you telling us very clearly we did not pay much attention to what history has done before and how we can prepare for it now.
And how markets can be irrational for so long.
Exactly. Because as Ken was saying, because I remember we were discussing, in history, every time there's such a reaction and the market starts pumping money, markets get a quick recovery.
Exactly.
Yes.
It's a
And
V-shaped recovery.
A V-shape, especially that pump. And this time, now we had all times never seen before quantitative
And
easing.
also, it's not just us. Even if you look at the analysts and Bloomberg, people are talking about K-shaped recovery,
Exactly.
GM-shaped
That's
recovery.
what makes
No, no one knew. No one knew. Like,
Exactly.
how is this thing going to
Recover.
the outcome?
It was
No one knew
so
the outcome.
noisy.
It was just, and I
But-
think
but-
until right now,
I think also one thing we have to factor in, which was bringing in that uncertainty, was the COVID.
exactly.
Because we never knew if we'd get a vaccine or we wouldn't get one.
Yeah, how
And if we
we
get
got
a
the
vaccine, will it work? Will it not work? Will we get protection? Will people accept to be vaccinated? All these things were things which were unknowns. And it was very hard for us to pinpoint that just because they've pumped money, things will come back. Because they could pump money and we've still not hacked COVID. We're still in lockdown. That
For
wouldn't
sure.
work. You get, so markets wouldn't price that in.
Yeah.
But immediately we started getting vaccines, you could see the markets now pricing in
coming
that
up.
things will go back to normal very soon.
True.
Yeah.
True.
Yeah, and I think I've lost the other point, but I'll just move on.
Yeah.
Because also, in terms now of after markets, I think markets broke the COVID high. Was it around, when was it?
Which market exactly?
You can look at markets.
Yeah.
Markets
You can
took
look
off
at
the COVID
something
high
like look at Nasdaq.
last year, I think.
Yeah,
it
I think
was,
last
and
year,
November,
November
December.
hapo hivi.
Yeah.
Markets broke that high and it's now up another 50% from that high.
Exactly.
See, so for me, I think that's an irrational market in terms of just benchmarking returns annually.
Yeah.
I don't think there's any markets have been up 50%, just a single market,
Yeah.
and still pumping up towards the end of the year. You see,
Yeah.
so it'll go to the books.
In the history
yeah.
books.
2021 was one of the biggest
Most
booms in
irrational
markets.
years, yeah.
So like how will you look at that graph? S&P 2016 made about 7%, 8, 9, even then 95.
Yeah.
You see, so it's a whole like it I think it disturbs the normal like how financial markets work.
Yeah.
I think at this point we are at the brink of a breakdown if just one thing or the other thing goes wrong.
If there's a risk
Yes.
just coming in. Yeah.
And like I think the market right now is at the most fragile moment. And I think that's the reason also, if you look at the tone of the Fed chairman, he was so keen
Not
on
to say
not
something.
promising anything about interest
Yeah, I
rates.
remember him being asked and so
He was so keen, yani hataki hiyo kitu kabisa. Then also there's another risk of this guy might leave office.
Oh, Powell.
Yeah, Powell might leave office. And we also don't know how the other person coming in,
The policies will
the
adapt.
policies he'll have. So for me, these markets, and actually I've been trading them and it's so hectic to trade them. Like I just don't, I think I'll just go back to currencies. Hey, indices has been hot. Like
It's
that
been
market is
hot.
that market is irrational, bro.
Especially, what leaded this? It was Nasdaq that got new highs, and I think Nasdaq is the one that preceded because of.
Nasdaq is in new highs.
Nasdaq-
Dow is
I'm
Yeah.
saying
All-
after the lows, yeah, all of them are new highs, but after the lows, and I think major factor of that is because of the pandemic-proof companies.
exactly.
The guys online,
yeah.
we switched a lot to online, so
Tech.
Nasdaq
Upwork.
was
Yep.
quick recovery.
Tech companies,
Tech
really
companies.
performed because I think tech companies actually car 140% up since the COVID low.
Most of them, yeah,
140.
very, very high. If you look at a company like Tesla, it's very, very high.
Yeah, look at
relative
Tesla
to
relative to,
how-
and I think we'll just have a chunk to talk about Tesla in this,
Towards the end.
yeah, and where we think positioning and how we think markets will move forward, like depending on if
So-
rates come into the markets.
Okay, so Ken, so now if you can explain to people, I think you're at a better position in terms of the bond purchasing, the yields. Well, what do you think about that?
So if you go back and read history, like you're saying, so all these things, if you want to understand them, I think in the financial markets, like we always say, it's a story repeating itself, only that it's wearing different clothes or in a different tone or by a different narrator. The story is always the same. So if you look at markets historically, if you go back 100 years, 200 years back, you'll understand that long time ago, they will use interest rates to control the movement up and down to bring growth and cut growth and go into recessions, control
So
recessions.
they're playing with the levels.
Exactly. But as we went into the 90s, 2000s, it was very, very clear interest rates are no longer working. So pushing interest rates up and down was no longer that effective. So we came up with something called quantitative easing, and Japan were the first people to bring that in when they
When
went
did this in? The
90s, yeah, late
90, I
90s
remember,
as
okay.
we went into 2000. So Japan was the first country after the Japan stock market crash of
Crisis.
1990s. Yeah,
Mm.
you remember the
It was
peak?
89, yeah.
Exactly. 89, yeah.
Around there, 89.
So Japan went into zero interest rate policy. So it was the first country to go
And
into
Were they the
Zero.
first also to go to the negative?
Exactly.
Which they still are.
which they still are.
Mm.
And so when you go into zero policy, it means even in a recession you can't do anything, because how will you hike rates when you're in a recession? You can't. You can't lower from zero. So how do you bring back the markets when
Look for
rates are
another
zero?
tool.
Exactly. So they looked for another tool. That's quantitative easing.
Mm.
So quantitative easing now means printing of money on debt by the Federal Reserve, by the central banks, to just pump that money in and try to see how it will affect the markets. And normally the economies come back up. So they don't do it. I think it's also important for us to explain that the mandate of the Fed is not to control the markets. Like the Feds are not, the markets will affect the Feds, but that's not their job. Their job is to control what is happening in the economy.
Like
But-
basically, the economically, the Fed has two main roles. It's called the
Exactly.
dual mandate.
Exactly.
It's to
Employment.
price stability.
Do what?
And employment.
Dual mandate.
Dual, okay.
Dual mandate. Yeah, price stability and unemployment.
Exactly.
Yeah.
So
If you look at that, it has nothing to do with directly with markets.
nothing. Price stability.
Price stability.
Okay.
So
Yeah.
by employment, it means everyone has a job. That's the job of the Fed, to ensure that. And the second objective is price stability.
Yeah.
So they need to control inflation, and they need to ensure we don't go to deflation or inflation. So they
So
just
that's
keep
their
on
work.
controlling.
And I
yeah.
remember
It's
yesterday
called
Powell
stability
was
too.
mainly
Yeah,
being
yeah.
asked those things.
Exactly.
Employment.
Yeah.
I think, okay.
So if you go back to so they tried to now look for a lever which can work in doing these two things, and one of them was pumping money to the economy. So when you pump money, you give money to the companies, you bail out companies which are struggling. You do some of these things. It's called quantitative easing. You have bond buying. So bond buying is like buying securities also. You like come back and try to bring in liquidity. It's basically an effort to bring in liquidity to the economy. And when you do that, often it works. It brings back the economy. But after the economy is back, you need again to remove some money from the economy to avoid things like inflation. So inflation normally comes up when there's too much money chasing very few goods. If you have 1,000, he has 1,000, I have 1,000, I have 1,000. Money, one of the features of money is it's scarce. If money is not scarce, it doesn't have value. So for them to control the economy, for the economy to work well, they also need to make money scarce. It needs to be hard for you to get money. But they can't do that without creating periods where it's easy to get money and periods where it's hard to get money. And that's when they pump in, and then there's tapering. So tapering means now stopping those bond buying programs, stopping now bringing in liquidity to the market or to the economy, and taking back that liquidity now into their own balance sheets. So the Feds normally have a balance sheets, and the balance sheet now is also controlled by asset liabilities. And so they'll try to bring back money, increase liabilities, and they'll try to cut back money and cut back the liabilities.
And that's what now the Feds are doing.
That's now what the Feds are doing. But there are risks contained in some of these things, because like Lawi was saying, the primary job of the Fed is price stability and employment. Now, right now, they've started tapering.
Actually, right now they've moved into another sector that is not their job.
Which one?
Financial market stability.
Exactly. There's also markets now becoming dangerous.
Right now, they just want markets to go to stable kwanza. It's a crash kwanza.
Exactly. Because also if markets crash, markets crashing is an indication of what's coming to the economy.
Yeah.
So as you are saying, markets ahead of reality.
Always. And if you look at even how markets performed, one of the reasons why, like Lawi is saying, someone like me was left out in a very big move of the bull market was I expected to wait for the economy to come back a bit for markets to price that move.
But no.
Markets don't care. The economy is not working. Okay, there's a lot of money in the economy. That's all we know. And markets will just keep on moving higher and higher and higher. So they'll price that move in and just keep on zigging up. You get? So if you look at what now the Feds are trying to do, is they're trying to at least control that too much money. And the thing that is bringing them risk is not actually just asset prices, it's inflation. Because inflation sitting at 5% for a very, very long time is dangerous. Initially, they'd say it's transitory. But it's transitory, they always mean we've just gone into a recession, we've pumped in a lot of money, we're still trying to come back up. And so there's expected for a period of 6, 3, 4, maybe a year we'll have inflation. But when that inflation keeps persisting, it becomes dangerous. because now that means this is an inflationary environment, and that is not good for the
And
economy.
right now we're at all-time 30 years highs in terms of inflation.
Exactly.
Way higher, not way higher, but just a bit slightly higher than
And the
2008 crash.
Exactly.
Yeah.
If you look at some of those things and then compare how much money was pumped in 2008 to how much money has been pumped now into the economy,
Yeah.
it's a
Triple,
lot.
it's too much.
Exactly. It's too much. So even if you look at markets, what some of the markets are doing, it's very easy for you to understand that some of these markets are really, really trending and trending strongly to the upside due to the too much money that is already in the market. But in this environment, the party will soon end, because there are two things which I think it's now important to think about. One is inflation. The other one is the rates. The other one is what the impact of these two things will have on the economy, and then from the economy to the asset prices. So for example, in their effort to try and control inflation, they could be forced to hike rates.
Yeah.
They could be forced. They don't have an option. They are forced to hike rates.
Their initial trajectory of the dot plot was to be
In
done, right?
2023, 2024.
And now what is
Now we're in 2021, 2022.
so we're expecting around 2022.
Yeah,
So
we'll
they're
have a
pushing
rate
it
hike.
a bit behind.
A bit behind. So if you start having a rate hike, there's a very, very high chance you're bringing in a rate hike in an environment where there's no full employment, the economy is not fully recovered. So what's likely to happen? You're likely to send the economy back into a recession. That's one of the major risks that they have. What will they do in such a situation?
Basically,
Start playing with the levers
that
again.
easy money has been taken out. Now,
Yeah, exactly.
at the same quote comes, we will see now who has been swimming naked.
Now we'll see. Exactly.
Yeah.
Because there are very many people in the markets currently, especially if you go back
Very many.
just into the financial markets. There are very many people. Because was it you that was telling, I'm sure in America right now there's someone living his best life, assuming he's a guru in the stock market, just because he keeps on buying and
crypto
buying and buying.
markets.
Exactly.
Kwanza crypto.
He assumes it will go up forever.
Crypto.
He doesn't
we're
understand
going.
there are tough markets, there are sideways markets.
They don't understand how interest rates can affect
Exactly.
all markets.
So alilearn 2 strategies, akaona nikibaingi inaenda, nikibai inaenda. So he has just been buying. If you look at a company like Tesla, I don't think there's any
Actually,
rational investor who's been
you're saying
buying
Terrace.
Tesla.
We're at what? 1,213. That means he's
Bro,
worth
55% in 1 month.
In what 55% move higher.
Eh.
And this is a company which is among
So
the top
it's
five
$1 trillion
companies
company.
in the world.
in the world. So now he's at $336 billion. Elon Musk. He just added
336.
10 billion yesterday, and this whole year he has added 167 billion. And I was telling Ken, we're discussing with Ken, this guy's added 167 billion in 1 year. This the richest man who has been the richest man for 30
years, yeah.
has never reached that price.
Bill Gates.
Bill Gates now is at 137.
Na amekuwa rich for over 30 years.
30
Amekuwa top
years.
4.
This guy in 1 year alone, 167 billion. And you're telling me markets are rational at the moment.
No, markets are not
no,
rational.
no.
But you
Very-
know, markets now can remain irrational longer than you can remain solvent. So
Yeah.
you really have to try as much as possible to avoid trying to say it will go down at this point.
Of course, can't catch a top.
you can't-
And I keep saying
hard.
you can't catch a falling knife, and don't try to stop a charging bull.
Exactly.
Najongele game, they red. Don't play that game.
Yeah.
So if you look at markets right now, I think it's also important for us now to come back into like the end markets are hot everywhere. Even in Kenya now, everyone wants to learn how to trade. Like it's now famous. Like, hey, there's an opportunity in the crypto markets. People even know Bitcoin more than cryptos.
Yeah.
Like they don't even
I was telling
understand
Ken
the
yesterday.
blockchain technology built on blockchain on Bitcoin. Like the technology Bitcoin is built on blockchain technology. So it's a very, very
Just no
risky.
Bitcoin.
Yeah,
Yeah.
it's a very, very risky environment. But in that risk, there's some opportunity.
Yeah. Before we move on, the same way I was telling you guys how Microsoft moved from it took 45 years for Microsoft to reach $1 trillion,
Yep.
and only under 1 year
We're now at 2
reached
trillion.
$2 trillion.
Yep.
Exponential.
So, yeah, like ile effort ya 45 years unataka kuniambia can be equated to kwani wa jamaa wanawaka how many hours a day?
Increase.
It's
get
not
you, yeah.
rational. It's not rational at any point.
And now Tesla is the second fastest company to reach $1 trillion
trillion
behind
Yeah.
Facebook. In
That's
like,
mad.
Tesla is also at $1 trillion. Yeah?
Yeah, trillion.
So if you look at some of those things, I think it's very. And again, another indicator that you can use
and
historically.
just as you continue, just something Pole, you'll come back to that. Don't forget.
Okay.
Something you should pay attention to. Look, just in terms of when we're talking about a company being trillion, you might think it's not a lot, but if you just look at the data, and we like looking at this, economies around the world that are just above 1 trillion
Very few.
are less than 5. Let me check here. In terms of GDP, we have like Kenya. We're here in Kenya. Kenya has a GDP of 100 billion
dollars.
Elon Musk is worth 330 billion. They're more than one man. One man. Now his company alone, Tesla, is like 10 Kenyans. So just to understand, Elon Musk alone is 3 times bigger than Kenya. His company is 10 times bigger than the economy of Kenya. Wow. So when we're talking about a trillion, put it into perspective.
Exactly. It's very important.
It's very important. It's not just talking trillion. But anyway, continue with Paul again.
So I was saying, actually, it's what you're saying.
Okay.
Another key indicator that you can use to understand when there's irrational exuberance, it's the billionaire index. Mm-hmm. Like the minute you observe that these people are making way much money in a very short period, which means most of the companies they run are appreciating in value very fast. That's dangerous.
And the Fed say the economy is not doing well. See, not
Imagine,
doing well.
the economy
How? When there's a man making a trillion company in 1 year.
160 billion in 1 year.
So those are some of the indicators you can watch. One is this, like, observe how wealth is just going into very few hands.
Yeah. And for those who don't know, you can just search billionaire Bloomberg's billionaire index. You can get it there.
There's a lot of money being pumped into some of these companies, and people just buying stocks, and stocks just going one direction up. I think when the party is over, we'll see very big crashes. Like personally, I expect
when the printer stops printing.
Exactly. I expect some very big collapses, but I can't tell when.
Yeah.
So I'm just patient and waiting. It may take very long. If you look like historically at some of the crashes we've had, like in 2000. In 2000, before the crash, I think the first warning came in 1996. And the markets just kept on moving
for another
4 years before finally, because it's hard to change the trend. Like you're saying, trying to change a trend is one of the most difficult things. Trends just don't reverse. True. They need some very big catalysts to make it just move to the opposite side.
Pullbacks ikuja tu kadogo 2-3-4%. I was looking at the stock market. Literally, there is no 2% drop for the whole year.
For a very long time.
Against 5, 8,
2% hakuna.
Even consecutively.
I think September was
one of the down months.
It was one of the down months. It was, I think, 3%.
It was like, for me, coming into 2021, I came in short. I was looking for a minor correction before we continue. I was surprised.
Even early on, even in February,
there was a drop.
Yeah, there's a correction.
Yani imekuwa tough, bro. Contrarianism huko imekuwa moto.
And you can see again, value investing, underperforming growth, momentum investing. So you'll see people like Buffett. Buffett is also top, but he's coming back again, number 10, 11. Why? There's a value.
Buffett is
14% when the stock is up 90%.
And we're not talking about value and growth. What's the difference?
Value investing is you're looking at the value of a company when making decisions. Okay. So you don't buy something if it's not valuable. You get?
Okay.
You buy something, the price must equate to the value. You get? But growth, you don't care about the price. You're just buying growth. You expect this thing will grow in the future.
Because one of the major growth investors is ARK Investments. I should just
by Cathy Wood. Exactly.
Yeah,
that's why she
growth.
buys Tesla. She'll go to tech companies.
So
like
how she just betting on growth? So she doesn't look at value?
Not like Buffett will pay so much attention to value. She'll pay more attention to growth than value.
Okay.
You get? That's the difference. For a guy like Buffett, it's about the value. What's the value of this company?
So they look for what? Undervalued?
Exactly. So they looked for undervalued companies relative to the real value.
Relative and to the price.
Exactly.
This price is undervalued.
This price is undervalued. So they may look even at a company and say, okay, this company is currently valued at maybe 40 billion.
But they should be at...
But it should be at 50, 55 billion. So buy that.
Okay.
You get?
And now growth?
Growth is...
Just enter.
This company is moving. No, not just enter.
This company is moving?
This company is growing. And it's growing at this pace. So I don't really care what the valuation is. I'm just buying growth.
Okay.
You get?
Yeah.
So you could buy a company which is growing. For example, in the .com. many companies were growing. Like I was watching Bezos, I was reading a book about him, and he was saying when his stock was crashing the most in the .com bust, his company was gaining the most customers, he was gaining traction, and all these things were doing well from the company's shits, but the stock was doing very poorly. You get why? Because you'll find that the market had already moved very higher relative to where it should be based on the company's growth. You get so you could find that if you don't pay attention to now the price and the value, you find that maybe you bought a top, maybe you bought irrational exuberance, such things. You get.
So there's value growth in the other?
There's value, growth, momentum investing. So momentum is like, momentum strategies are the ones which are making as much money as you can right now. Contrarian strategies are really, really struggling right now. Because you find that you're trying to go short, things are not working your way. You're trying, because there's a way markets normally work. We see a move, there's a pullback, like he's saying. We see a move, there's a
normal
pullback.
market.
An efficient market. Exactly.
Imekuwa inefficient.
Sasa inefficient. Like it just keeps moving in one direction. Like even if you're trend following, like for me, I had some trades which were very, very well positioned. I expected some pullbacks to come back in. I've not seen a pullback ever since I left those trades. And I think we've gone up 1,000 points ever since I took my profit. So there's a lot also that you're leaving on the table even as a trend follower.
And you should know that in advance.
Exactly.
Because you can't, when do you exit? You exit when the market is still moving up, not when it's coming back down.
That's also
because when it's coming down, there's no buyer. Everyone is selling. Who will buy?
Exactly.
So
that's why it collapses.
And that's why we are seeing Cathy Wood left. I think it was around $800.
$800 million.
Yeah, she started exiting. It was 700, 800. And now people are watu wanamwingilia like, hey, she's left like what, $200 million on the table.
Anyone who's game,
they don't understand. So and she's a growth investor. I think her, according to her, the growth also meant wame grow what you expected. But anyway, so good point. And because personally I'm also watching on the crypto market.
And talk about crypto
and what we've been seeing for the past year, we've been mainly invested with a lot of dumb money and a lot of institutional money. So we've seen the market, especially like you were saying with the pumping of the quantitative easing, $1,200 stimulus checks. People are not going to work. They're not doing anything. Most of those people throwing that money back into crypto. Things like Dogecoin, which personally I believe has no value at all.
Caleb is a big hater of Dogecoin. If you want some Dogecoin,
don't come to me. You need George Soros. Just play the game.
That's while the music is playing.
Exactly. Just dance to them, but not long term. One way or another, that thing, personally, even if the richest man in the world has them in his portfolio, personally I don't believe. But anyway, what I was saying,
Elon has some Doge.
He
never bought. He was given. He never bought them. Ama he bought.
Okay, I don't know. He was
given when he was told to run the thing. Ama, so you're the one telling me that story.
No. He bought.
He bought.
He said he only has 3 cryptos.
3 cryptos.
Bitcoin, Ethereum, and
Doge.
Bitcoin and Ethereum makes sense. Hapo kwa Doge, Elon.
And right now
Savanga never bet against this man.
And it's clear if you try to sell. Those people who have been trying to sell against
Peter Thiel said I can't go against Elon Musk.
But Peter Thiel said, and those who couldn't hear the music were surprised when they saw others dancing.
Like we were looking with Ken, there's a retail trader who was made over $6 billion.
A retail trader?
$6 billion investing in Tesla, bro.
Tesla. I also saw someone who'd invested like 8,000 in January in Doge would have. Like
everyone who's followed Elon Musk think he's a god right now. I'll buy Doge, we bought. Tesla, if you bought, just followed him. Billionaires, they were saying 8 billion.
And there's a book called Narrative Economics. I think people should read that book. It's about how narratives can help the economy grow, can help stocks move higher.
Narratives what? Stories.
Exactly. Stories. Like you're saying, people, we bet against Tumse. So people just buy. Seriously. Because it's psychological. Like the market's also psychological. As much as there are many other factors like valuations and those things will weigh in the long run. In the short term, everyone's opinion really matters. So you'll find that people's opinions over what an asset should do or what price it should hold. Really. And there's also the pendulum of psychology in the markets. I don't know if you guys track it. There's a
There's
psychological
euphoria,
exactly
despondency.
Euphoria, exactly, panic, fear, greed. So if you track it, you'll understand even momentum in the market. Like you can spot greed. I normally tell people when you're with them in class that I'm really surprised when someone just looks at a candlestick and he says, "This is a candlestick." Like this is not a candlestick. This is money. This is panic. This is
Data.
fear.
It has data.
It has data in it. If you pay attention to those things, if you see the emotions people experience in the markets, you have a better chance of doing some things in the market. Yeah.
Okay. So back to crypto. So I was talking about how crypto has been surging. With inflation's going high, crypto has acted as a hedge. Bitcoin leading the way. Ethereum following very suit. Other coins we've been looking at but haven't really pushed that much. XRP because of SEC challenges. Okay. And all this time, like what we're doing, like the other day when we were at the office, we were doing a bit of portfolio restructuring, sitting on a bit of cash, especially on the XRP because Ken came up with this idea. So remember when we started buying, I'm the one who came up with the idea.
Yeah.
Did some research on XRP and this coin, then we bought. And then now coming out, Ken came up with the idea of coming out. So this is also an advantage of working with the team so that you can look at different perspectives. So the point was, or the idea behind it, the basis behind it is that Bitcoin has really been pumping. Ethereum, most coins, all time, Solana, everything has been pumping. And we're really like 90% invested in XRP. Not that we think XRP is still bad. We believe XRP is still very good as an investment. But the fact that all these other things have been pumping to new highs. Gold, before it crashed, before we got the 20,000 crashed, stayed for about 3-4 years. I've gone to all-time high, 60,000, 65, crashed all the way to 30,000. And then now it's back at 65. So it's at the previous top. Yeah. So all that time, XRP hasn't been doing anything. The first pump of this, because all coins more or less follow the trajectory of Bitcoin. So the first pump, XRP didn't go to new heights. The second pump, it's not going anywhere. It's just dangling right now at like the $1 mark around there. So the best thing for now, especially with the case still going on, we're not sure, uncertainty.
There's too much uncertainty.
There's too much uncertainty. Now with the fact that we are expecting now the interest rates maybe to start pumping back in. Okay. Now inflation being controlled, and we're seeing Bitcoin has been acting as a hedge against inflation. Now things are changing. Now with all those risks on the table, it's even if XRP continues going to new highs, it's not wise to just sit blindly and say, let me just hope liwalo. If it goes, if it doesn't, strategic approach. And that's why we sat on cash. And when we're sitting on cash, when it comes to crypto, we're sitting on the stable coins. We're sitting on things like USDT, which is Tether. So it's like the dollar for cryptocurrency. It just stays at $1. Okay, that doesn't gain. So sitting on that now, we watch how markets will perform. Personally, looking at just technicals, when it comes to things like Ethereum is now pushing at all-time highs, 4.5. Bitcoin is back to all-time highs. What I expect, I expect, especially with what reactions we can get, especially with this tightening coming back in, we can get some corrections. Okay? Corrections. But according to irrational exuberance, psychology of people can continue just buying. People don't react. We can still go straight to 100,000. It's a viable thing. But I'm watching prices, how we can get. If you can get those corrections, then it'll be good to watch how market is reacting to it and maybe get some buys later on at a correction. Even XRP, watching how SEC is doing. Because if SEC start easing and things start getting back to normal,
you can buy
even if it's back at 1.5, it's still a good buy because now you're buying the bull market. Previous high was at 3. Now we're at 1. We're about 60% off. It's still a good bargain. So yeah, that's what we're watching, and I think it's interesting. Like I said, starting this is the best time to learn. There's a lot to learn. There's a big market, and there's one more market I'll talk about in the end. It's a bit different from this one, but I'll talk about it in the end. But yeah, that's my points on crypto. That's what I'm watching. And it's very interesting. And one thing before we forget, and I think I talked about it last week. If you've not watched last week's videos, we talked about, what was it? The different markets. Different markets. So you can watch that. Markets, the different financial markets. So go watch that and understand. But just to recap, like we're saying, you remember what we're looking at in terms of now industries that we're growing, in terms of how markets are going to new all-time highs. We cannot forget to mention how, when we're talking about some Fred Bankman, the richest guy in crypto. How old is he?
29.
How much is he?
22 billion.
Now compare that with the way you're telling me in terms of Facebook, the article you're showing me. The CEO alikuwa billionaire by what age?
22.
There's a trajectory. There's something you're looking at. There's a difference. I don't know it was on age or it was on how fast he made that money. It was how fast.
Yeah. So Sam Bankman has made 0 to 22 billion in just 4 years.
Oh yeah.
In just 4 years.
Exactly.
He went from nothing to
22 billion.
Yeah, behind his back. But again, it's building a valuable company and crypto growing. So it's the exponential curve of crypto, I think. Like you're saying, in 2017, you had how many cryptos?
When we started,
Yeah.
there were less than 1,000.
And right now?
13,000. Crazy.
Explains everything.
And that's the same thing we were seeing happening in .com.
Yeah.
Companies were just being created. People are buying just because it has a website. Everyone is buying. I swear. Right now, that's what we're saying with the Dogecoin, Shiba Inu. A lot of nonsense.
A lot of nonsense.
Like
And
13,000 coins.
Yep.
That's like 13,000 companies in 4 years.
most of them will go to zero.
like the squid coin inisha crash to zero.
Those are
Ulikuwa na
squid coin.
I'm just squid coin.
I don't know.
You guys, man, squid coin ilipanda up 25,000%.
After Squid Game.
Just
You know-
last week.
You know, I heard about it, but I didn't.
Ilipanda
At the
squid game.
I thought it was,
Squid coin.
I thought it was a joke.
Bro, your stuff ili crash, yani ilipanda in one night ilipanda 25,000% na ika crash the same night to zero. Kwanza hiyo sasa ilikufa kabisa.
25,000.
Ilikufa bro. Then
Sasa ningeka tu
so
hapo town ningekuwa na
actually
No, hapa Squid Game crypto token cost one Shanghai investor all his savings.
jamaa alikuwa bro la kushow ama
Jamaa
serious?
basically ni founders walimekio stuff. Founders walimekio stuff waka create liquidity na waka close up shop wakaishia.
Those guys were smart. Me kudos. Kudos man.
Kumodo wala.
Watu walitengeneza walikuwa smart.
yani due to hiyo movie they
Yeah,
decided
man.
to create
Shitcoin, they call shitcoins.
Because it was trading on the pancake swap platform. Oh, Jesus Christ.
It's
So
just
I didn't know
crazy,
that. Good information.
didn't know
Good
there was
info.
such a coin.
Kumekuwa na squid coin crash. Kwanza kuna jamaa I think they went with I think $22 million. Those two boys.
In one night.
In one night, $22 million.
and yeah so they capitalize on trending shit. Those people are smart,
Joe.
Hapo walifikiria.
lakini si wangekaa nayo wangekuwa mabilionea. Sasa imejaa sana nunua vitu. Ai. That explains how much easy money is in the economy.
Kuna too much money in the
Imagine.
economy. Hata economy
A
iko
lot
sawa.
of easy
Hata
money.
interest
Someone is
rate
losing his
inafaa
savings. Can you say? Hey man, it's
Yeah.
5 years ago people didn't make such
And
decisions.
also, I don't think if you guys know, there's also some geopolitical things happening globally.
Yeah.
China, Taiwan, and the US.
Actually, the issue with Taiwan and China, it's because of this what's this thing called?
What?
There's this raw material that Taiwan is the biggest producer.
Yeah. So China in a try. They want to bomb them and kill them.
Taiwan.
Nimeona
Take over Taiwan.
China increase in nuclear.
That's actually China juzi ka 2 weeks ago wali launch a nuclear missile yenye ili go around the world. Around the world man.
Nuclear tu ina
Nuclear ilichapa around the world. So
serious.
wasa states waliona.
Pentagon.
Pentagon saw it.
Uh-huh.
Then Xi Jinping akasema tu ni it's a test wanafanya tu ya sijui spacecraft or something tu aka disband your stuff, but sasa ime cause some panic in the Oval Office. Awase sasa wanashanga what is China trying to make?
The chief of defense.
The black guy.
Sorry. This one. The general.
That general.
Uh-huh. For Taiwan or China?
Cause
He's for US, that one.
for US is a black guy. I might think that is the interior minister or something. So there's some panic also in terms of China US relationship globally.
Yeah, I'd actually talked
geopolitical.
about it. Yeah, they are geopolitical because China and the US, it's a power.
So yes, they're
It's a power
number
struggle.
one.
Like who has more power? Who has more abilities to fight? Who has a better tech? 'Cause
China believes they're
is
number
also
one.
now
US
developing
believes they're number one.
Exactly. So it's a power struggle, and now when two people are fighting the ones who are bound to suffer us. The rest
Very
of
true.
us, the rest of us are the ones who are likely to
Developing
suffer the
world.
most. Developing world, like
Man.
we're the ones who are going to have like issues with some of these things if they develop to serious issues. But if you have World War III,
Because we actually depend on both countries. We
Exactly.
depend on
Yeah,
China,
yeah,
we
very
depend on States, we
strongly.
depend on Europe.
so
Mhm.
it's quite hard.
So I'm actually curious about how this nuclear thing will go on. I think
We'll keep track.
China, they're coming. China, like,
And I don't trust the Chinese people. I trust the American people, but I don't trust the Chinese
Why?
people.
Because they're very secretive. You know, they never talk
they're very
about anything.
secretive.
Yeah.
It's not a democratic country, it's an authoritative country. Like it's not something that you can really trust in. Like the billionaires who go on a finyo. Like which country seriously crushes their business leaders?
As the guys who are building the economy.
Eh,
Yeah, I think this week, Charlie Munger said China are way better at handling interest rates than the US economy. Like I say, unajua handle economy better than
the US.
Than the US.
because their system is top down. It's bottom up. I mean,
Yeah, bottom up.
Bottom up.
The interest rate is at 7%, bro.
like they are more focused.
Oh,
on,
serious?
Yeah,
7.
7.
Shit.
Yeah,
they're more focused on protecting the man in the middle. Like it's not a
middleman.
country where it's in countries like in the US it's the individual.
Mm.
In the US that's their system. Like
Capitalism iko peak.
exactly.
Capitalism.
It's the individual. We don't care about the family.
Mm.
But in China they care about the family. You get
So the way we say you can go to America, the way capitalism is high, go live the American dream like what
Exactly.
they're doing. You can't have that in China.
it's hard, man. It's hard.
And that's what we're saying, what they're doing to Jack Ma. Because we're going through the list, Taras, we're going through the list with Ken on Bloomberg. If you just look, China, average, all of them are down like 8 billion.
Walai.
Wamekuwa pressure.
mabilionea huko wana lose.
It's a tough time for them.
It's a tough time for them.
The government wamewakujia.
But I still believe it's their time. As much as I don't like
To
them,
shine.
I don't trust them, I feel like it's their time to shine. The US has lagged a lot, has led a lot.
It's good. It's just like business. The competition.
Yeah, it's
Like,
it's
now,
good.
Like,
Like,
of course, transition of everything has to transit to somewhere.
Exactly.
The US were not born there where they are. Walifika.
Walinyang'anya Britain.
Eh.
Someone says actually the 19th century was Britain's century. The 20th century US, 21st century China.
China.
yeah. Transition.
Transition.
And Kenya.
Work hard, bro. Work hard, bro. Can see you have good dreams for this country.
Africa, bro.
But anyway,
we are
you see.
as Kenya tuko ka 30 to 40% unemployment.
Yeah.
Bro, 20% unemployment ndio ilifanya US wakafanya all this madness.
20.
22.
Like they couldn't allow it to sit at that level.
Hiyo angekubali. Kenya at 40% tuko na bado interest rate at
Bado
8.
wanaiba.
Interest rate iko 8
Na
kwanza.
kutuibia kwanza. Hiyo stuff.
Tax iko sijui
Yeah, don't have
30.
corruption bado
Hey,
iko.
hey, my friend.
Our economy is
Economy.
really it's not being. But anyway,
But
they're trying
talking-
also. But if we stop some things, I think we can do better.
Talking
We
about
couldn't complain.
economies and developments, I don't know, are we coming to an end? There's a certain topic I wanted to bring.
Okay.
Yeah, I think we
I
are.
was watching the full story for the presentation, the keynote for, it was more of a keynote, no, whatever, for Meta.
Oh, the Facebook one.
Yeah. So for those who don't know, Facebook have changed their name to Meta. So now the Metaverse, I was watching, what's his name? Mark. Talking about it. Look, bro, let me tell you guys, I swear to God, if your children, your friends are not doing anything with the development, software, coding, I swear, bro, you'll be left behind. You see the way we're talking about in future, coding is going to be the new language in Nini. Hey, bro, that future is not away. It's now.
It's real.
Yeah.
If you watch that metaverse with what you see now, the way we're talking about economies fighting, slowly, yeah, the economies will still be there. Not that will go.
But we'll be fighting technological wars.
Now it will be technological wars, corporate wars. Guys are already at $1 trillion. We're not going to slow down. Hata tukicorrect, tutakuja tucorrect, tufike tena $5 trillion.
Yeah.
Correct, 10 trillion. Like it's no joke. These guys are big. But anyway, so I was watching the metaverse and how that thing is going to, if it does what it says it's going to do, revolutionize every single thing, is going to be at that how we work, how we interact, how we do exercise, how we go for concerts, every single thing. And it's very, like instead of you experiencing a photo on your phone, you're experiencing it like you can experience the feeling of that photo. You can
Get into the environment.
Get into the environment. So there's someone on Twitter, he came and said he was concluding this. Okay, let me read for you guys. I took some screenshots, but you should watch that thing. So
trading ndawaachia sasa. Melta is my thing.
So listen. Okay, so part 1. Everyone is wrong. Most people think the metaverse is a virtual place, like in a movie Ready Player One. You remember there's a time I told you about Ready Player One. It's a good movie you should watch about how metaverse. It's by Spielberg, my guy. Yeah, a virtual world like Minecraft, Roblox showed that Facebook demo yesterday. What if it's not a place? Part 2. What if it's a time? What the F? A time? Yes, a moment in time. In artificial intelligence, there's an idea of the singularity. It's a moment in time where AI becomes smarter than humans. Mm-hmm. That's singularity. Okay.
Mm-hmm. There's a book called Singularities Near.
By who? Okay. So he's talking about how machines can come.
Yep.
Okay. It's a moment in time where AI becomes smarter than humans. The moment where artificial intelligence is greater than human intelligence. What is it? The metaverse is the moment in time where our digital life is worth more than our physical life. Okay? This is not an overnight change or an invention by Steve Jobs. It's a gradual change that's happening for 20 years. So work, from factories to laptops, boardrooms to Zooms, friends, from neighbors to followers. Where do you find like-minded people? Twitter, Reddit. That's why you go looking for like-minded people. Games. More kids play Fortnite than basketball and football combined. Okay? Tuendelee. Wait. What? Listen. Identity. Filters are the new makeup. Stories are your personal billboards to broadcast who you are. Okay? What matters more? What you look like in real life or what you look like on Instagram? Everything goes digital. Your friends, your job, your identity. And now with crypto, your assets are online too. Fortnite skins are the new skinny jeans. If everyone hangs out online all the time, then your flexes need to be digital. Soon, some company will make smart glasses, and Meta is doing that, will make smart glasses that sit in front of your eyes all day. Okay? We will go from 50% attention on screens to 90% plus. 90. Imagine, vile tu simu tu wezi achilia simu for some time. Imagine. Now, you don't need to touch your phone all the time. You just have glasses and you're experiencing everything. Okay? So as I finish, that's the moment in time when the metaverse starts. Because at that moment, our virtual life will become more important than our real life. Is it a good thing or a bad thing? Like anything, it's neither good or bad. It's just a thing. A very different thing. Anyway, that was a thread. I was reading.
Can I withdraw my demo profits on the metaverse?
Tutajua into crypto. But if there are a lot of changes the way it's happening with digital currencies now, metaverse, NFTs, which is digital art. A lot of things are really going online. I think it's a wave we should really pay attention to. And now, the good thing why I'm saying if you're not coding or what, it's a really good thing is because what Facebook takes advantage of, or the Meta now, their new company, is not in-house building of apps or nini. They outsource. It's open source. So people from outside are going to help build the metaverse. Exactly. Yeah, so if you can get that wave earlier on, and if you can learn it, especially if you're starting out in any career, trust me, that's the way to go. And you'll itakuwa fiti. Now looking for brick and mortar, easy one-to-one jobs, physical.
Upati? Job ni meta.
Tough job. So that's just an advice, just added.
Lakini msikodi ile website, mkodi ile deep
ile deep.
Website ilipita huko 90s huko. Sasa ni deep stuff. Kama utaweza kufika huko, it will be very very difficult again for you even to qualify.
Yeah, but you can take time and watch that video. It was though like an hour long, but it was interesting. It was really interesting.
I'll also watch it.
It's
want to
called,
understand where the world is going.
welcome to the meta. That's why you put your NFTs. Tell people, come watch my art. Weka hapo NFTs zako. Watu wana bid.
So ule people nenda ni buy stock ya jamaa atakuja kuwa tajiri.
He's already rich and he's still growing.
So now you should be buying cryptos which will be valuable in the meta, NFTs which will be valuable in the meta, technology companies. That is what should be in your portfolio.
Yeah, so now and the
But
AI
now,
companies.
look, as these companies build the metaverse, now Facebook as meta now just grows exponentially. Kavile BTC to sasa ina reign to the world huko.
Dangerous.
The next pullback minda buy bro.
Pullback here.
Facebook pia minda buy vitu kadhaa. Na una hold for decades bana. Si ati una buy ndatoka ikirudi. Kama Buffett amehold Coca-Cola for 40 years.
Serious?
Buffett anaanza dividends huko 1970.
Anaendelea kwa hadi tu.
He owns 40% of Coke bro.
Berkshire.
40%. Aliona hii soda inaenda kufika hadi Kenya.
Now Meta inaenda kufika hadi.
But now see there's still like some issues which they have to fix.
Yeah,
One, we have to have like full internet compliance across the world.
Starlink.
Facebook wana work on such a project.
Even Google.
Even
Many
Google.
people.
Google are working on the balloons.
Starlink
they are
but
working
ndo fiti. Facebook.
Again,
Because Starlink is the satellite ones.
Naisha launchiwa ina work.
most of them are being worked on. Like they're being worked on ile
So and it will be free. Internet will be free. It will come a point Wi-Fi Safaricom was to innovate. Out of business.
Business meisha Meta.
But anyway, yeah, that was just added information. Very interesting. I was watching today morning on current.
But now
The problem is for us as Africans hapa hivi hata tufanye nini?
hatuwezi kuwa huko.
That's what I was thinking.
Hata hatujui tunaweza unda nini ya metaverse.
Look, that's what I was thinking. I
Hatuna
swear,
manpower cha kuunda.
with the trajectory how we are growing, bro, we won't experience something. Mina check.
The West will be more powerful than us by far.
Look, your American dream, China dream, whatever kaitakuwa, we should just go to anze pia siku enjoy life huko kidogo. Kenya, by the time we experience some things, bro, honestly speaking, we just make some money tuende hata kanka US for hata kati kuna dual citizenship.
Onjele VR glass pale V-money how much?
Imagine. It's just like what we're talking with Ken. Just added like the Range Rover 2022. Ultamani how much?
$120,000.
Kenya
24 million.
Double. Wezi. Na sin third world. Unabuy gari double the price. As in
Sheka kidogo.
Sana.
culture. Anyway, let's end it there today, people.
Anyway, that has been a wrap up of the global markets environment.
And economies.
Yes, and economies,
Better
geopolitical.
technological wars between China. Why you should move away from Kenya?
And also in terms of war, what we're saying, also war on the corporates, what we're saying. Remember Facebook, Apple
Huawei
came,
and Google. Tuanze na hiyo.
Huawei and Google, Apple you
Tunatoa
saw.
kwanza kwa Play Store.
Hey, remember?
Those things will come bana.
Hivyo Apple wametoa ile stuff ya ads ikahat Facebook very much.
Technological war inakuja. Kampuni dagi inavunja.
Sure. That's why my focus is on how I'll invest in agriculture. Things I can touch, man. Things I can.
The shift.
Huko by technology, watu watakula bado wanakuwa wanaishi meta.
Hata ile meta mtakula.
True.
Agriculture huko iko sawa. Hata waingie meta. Watakula tu.
You'll still buy. Anyway, it's been a very interesting chat. I hope you listen to it, share it with your friends, family. Listen to all the other episodes also if you've not, and subscribe to our YouTube channel. So we also have this on other channels if you're not aware: Spotify, Anchor, Apple Music,
Apple Podcast.
Yeah, Apple Podcast I mean. So make sure to tune in wherever you are available. If you can't afford bundles, go to Spotify.
Better.
Yes, guys.
So see you guys